Hello and welcome back to my Myrtle Beach real estate video blog, where I'm bringing you relevant topics about our local real estate market here on the Grand Strand. Thanks for joining me. I want to talk today about renting the property versus selling. So the question I'm receiving right now a lot is I'm talking to people that have been unsuccessful selling their property, whether it's a home or a condo, and they're saying, Greg, you know what, I'm not even going to sell it, I'm just going to rent it out. So I wanted to address this topic, and just a little disclaimer, what I've noticed over the past several years is there's two types of people that rent their property. People that do it intentionally, an investor or someone buys a property to rent it, and then there's people that rent it out as kind of a default mechanism or maybe a backup plan to selling. Usually the latter does not end up as well. So I want to explain why, and maybe just throw out some ideas to think about if you're on the fence and you're considering renting your property. I think there's some things you've got to look at and make sure you understand before you jump into that that idea or that thought of going ahead and renting. So a couple things. I call it doing a reality net sheet or a reality cash flow chart, whatever you want to call it. So you've got to just grab a pad and a pen and literally write out some things like, you know, what is my monthly payment? Now that's the mortgage payment, taxes, insurance. Now going back to taxes, if this is your primary residence and you have moved away and now this property becomes a non-primary residence, your taxes in our counties go up dramatically. So you've got to get a real number. Okay, you've got to call the assessor's office and tell them your tax map number and find out, as a non-resident, what will my taxes be? Okay, I think you'll be surprised. So you put that number down. If you're going to get a management company, if you're out of the area and you're going to try to handle and field calls from a tenant, you know, at midnight that's got a broken water heater, I would advise that you hire a management company. You put that into the cash flow. Miscellaneous expenses. I would recommend that you do a monthly little miscellaneous amount of money that would be for repairs. And then if it's a condo building or an HOA, that especially on the ocean or even a golf course community, there's special assessments that occur from time to time. I think you get a budget for that. And then I would go 1 month out of 12 where you just budget, I'm not going to have a tenant. Hopefully that doesn't happen, but I think this is a reality cash flow chart where you can really see, okay, this is the bottom line. After I receive income minus all these expenses, what is my net in my pocket, or how much am I losing? Okay, now if you don't have a mortgage, you want to look at, okay, you're making a positive cash flow, but what is my rate of return, number one? And number two, what's my opportunity cost? I mean, if I've got $200,000 in cash money that I can pull out of this property versus leaving it in the property and having myself at risk of, miscellaneous expenses and vacancies, etc., would it be better for me to invest that $200 somewhere else? Can I get a better return on my money? So I think the big deal is here is to get real with what the fees are going to be and what your net income is going to be, and just make a business decision at that point if it makes sense to do this. So let me know if I can be of service. You want to get a real evaluation of your property's value and then make that decision. Do I rent it or do I go ahead and sell it at what the market will bear? I'd be glad to help you with that or connect you with a professional management company. I'd be glad to do that. So thanks for watching. I look forward to talking to you next time.